All right. I think we're live, Kimberly.
We are.
Good morning, or wait a second.
Afternoon.
It's afternoon where you're at. We have a special guest today on the Agent Blend live real estate show, Kimberly Falker from, where in Florida are you from?
Tampa Bay area, specifically over in the Pinellas County. I'm in a cute little town called Safety Harbor, which is about 20 minutes from the Tampa Bay airport and 20 minutes to the sugar sand beaches of Clearwater. So I'm in the perfect spot. My little town is right on Tampa Bay. So
Nice.
it's a unique little hidden gem with a main street and a railroad tracks and all the shops and restaurants. So it's, kind of in the heart of everything, but it feels like a small little quaint town. So it's the best of all worlds.
How cool. And what type of weather are we enjoying today?
Well, it's very cold here today. It's 69 degrees.
Okay.
So I have my big jacket that I wear outside. But with that said, I was born and raised here, but I lived in Boston after grad school, and I met and married a guy from Minnesota, and I didn't know they all go back. And so we moved to Minnesota, and we lived there for 20 years. And we're up there for part of Christmas. And when I was there, it was 20 below. So I'm okay where I am right now.
So you've experienced quite a
variety, yes.
Yeah, especially in the last couple of weeks, right?
Yeah, right.
Oh, that's wild.
So yeah.
Well, as you may have probably heard, we're surviving the crazy, climate here in San Diego that I say obviously sarcastically.
Yes.
We panic when it dips below 65, and we also do the same when it goes above 75. So
there you go. You live in this world.
Yes. Awesome. Very well. I'm giving everyone that lives around me a hard time, but I am very soft. I'll just self-proclaim that. So.
Well, I've become actually the biggest joke when I moved to Minnesota, because everyone knew me as the beach girl. So it's like, are you kidding me? You're living in Minnesota. I didn't even know where it was on the map when I met my husband. So
love it.
But it actually is a very beautiful state, and the cold keeps out some of the riffraff. So it's
Well, it sounds like a lovely place. So it sounds like I'm going to have to put a push pin on that area the next opportunity my family and I get out there. Our co-host is in mid-commute, John Zimmer. We tried to connect him, right?
We did. We tried very hard.
but AT&T was just not letting it happen. So. I'm glad we don't have any sponsors on this show. You know what I mean?
There you go. Especially not AT&T.
We could take a dig at whoever we want, right?
Right.
So John may be joining us while we're talking through here, and and if we do get any video or audio, we'll gladly put him on the broadcast. If not, I think we have a 2-person powerhouse team here. So
yeah, I think we can handle it.
So as always, guys, we have 2 to 3 articles today. We do have 3 coming from everywhere, from CNN, U.S. News, Inman, and let's just kick it off, Kimberly.
Sure.
The first one that I had lined up here was about investing in real estate without investing in a home, and this was from CNN. And they basically just asked that question, how do you get into real estate without taking out a mortgage, without, buying a condo or buying a single family home? And this has just been in the news everywhere lately, right? I mean, it seems to be kind of the thing right beyond cryptocurrency that people are talking about in different ways. Whether you're a first-time home buyer that hasn't had an opportunity to win a bidding war, or you're just trying to diversify your portfolio, and it's to me it's really interesting, and we can get deeper into it. But it's kind of using the stock market that's what I was reading, getting into different mutual funds and ETFs that are putting all of their portfolios into real estate and letting that investor, benefit from those larger investments. And it looks like here, excuse me, guys, it looks like we have John trying to get back in. Let's see what type of connection we have.
Hey guys,
John, we see you.
I'm sorry.
No, we just started. Kimberly and I were just having fun talking.
That's right.
Good. Kimberly,
So,
I'm not normally this disheveled. My apologies.
It's okay.
So I just introduced the first topic, John. We're talking about investing in real estate without buying a home, and we were talking about how at this point you can go into those different markets who have mutual funds, the ETFs, and what is it? I think is it pronounced REITs? Is that how people are shortening it? The real estate investment trust?
Yes. That's how I understand it. Yeah.
I like to butcher every pronunciation of stuff. So, it's, but
Right.
I thought that was really, I was telling Kimberly that a lot of this is new to me, but that I find that it's an interesting way for people that are more comfortable, in the stock market and buying stocks, buying bonds, to actually start to leverage and diversify their portfolio to get into real estate without buying that investment property, or for some, maybe without even buying the home that they're living in.
Right.
Did you? I think there were two main different ones they were talking about. It was the stock market and then the crowdfunding. Did either one of you see that crowdfunding?
I did. It looked like the crowdfunding, you put in a much smaller amount.
Yeah. What?
They mentioned Fundrise with a minimum investment of $10. So.
Right. Yeah, that's pretty incredible. And I think, the article, can both of you hear me?
Yeah.
Okay. Yeah, I think they went on to talk a little bit about Fundrise and the small amount of money that you can put in to feel like, yes, I'm participating in real estate and what's going on in the real estate market. Obviously you're not going to be able to capitalize on maybe the huge gains that people will see if they own property, but at the very least you can participate and you can kind of see how that all works, and then hopefully stem out from there. But
Right.
yeah, the whole idea of like Fundrise, for example, I think is brilliant, and it's a great way for people to get their feet wet with real estate investing, even if they want to put $10, $100 towards it. That's something. So
Do you guys know, this is where I was a little confused on the articles, in this type of, in the REIT investment process, when does the person that invests receive who gets to decide when the property sells, or do you know anything about that?
Well, from what I understand, and John, correct me if you know any more about this, is that part of the investment, I believe, in either one of these, whether it's any of these crowdfunding, smaller businesses or the REITs, is that you really don't have control.
Right.
That it's kind of the reason why it is quote unquote affordable to get into is because you're simply investing in a group that's being managed entirely on its own. You know what I mean? That you really don't have any input in on. Is that what you got too, John?
That was my understanding, but my question is,
yeah, exactly.
Go ahead.
Exactly.
But is the goal for somebody that invests is that at some point in time the property will be sold and then you'll get whatever piece of the pie you put in? back at the rate that it increased in value? Like, is the plan for them to sell the properties, or is the plan to just have an investment in a property long term?
The way that I interpreted it was that they're purchasing and acquiring so much on volume that it is a constant, okay, we've determined we need to sell this property, or we've determined that we are getting significant rent, within the REITs, whether they're buying large commercial buildings, and it's just it's all the revenue that they're generating from those commercial buildings. I mean, that's what I'm speculating, is that it's. I remember part of the article was talking about how the REITs are a little better bet just because they have more money, so they're able to buy even more. And if you're buying homes all across the country, then you're essentially diversifying a lot more than if you're buying, $10 into a company that may have a smaller investment pool, and then it's a little more vulnerable. And if they're gonna cover that vulnerability, then it's probably even less. What did they mention? Let's see. They said it was lower quality of properties with the crowdfunding platforms.
Yeah, I actually pulled up the Fundrise, and it said that the returns generate dividends on a quarterly basis while their shares grow in value over time. So I guess you get like little small dividends over quarterly. Mm-hmm. It's a great model. I'm brand new learning about it, and I think it's an exciting way to, especially like somebody, can you imagine somebody like who's 18 or 19 just start putting a little bit into some of these funds, and instead of just doing stocks, you could also, quote, have real estate without having to have the entire amount that you need to buy something,
Right. Yeah. And
absolutely.
A lot of these REITs are, they're massive portfolios. So, like you mentioned, Jeremiah, big commercial properties. I've also seen smaller properties though too, like single family residences that they'll include in their portfolio. And they're able to leverage their economies of scale across the United States and abroad, just depending on the REIT that you're involved in. So yeah, it's not a bad play. And obviously real estate continues to appreciate over time, and it's a good way to diversify, not just in stocks like you were saying, but also to have something where you're investing in it is a real asset, because it's something that is producing cash flow for you. So.
With this all being said, though, at the very end of the article, it did highlight that it's quote unquote less risky, but the returns aren't anywhere close to what you can get from actually investing on your own directly into that brick and mortar. And I just, obviously, maybe I'm just pointing out an obvious fact, but that's something to keep in mind, that when you do invest in property, you have that potential to make a much larger return, and you shouldn't go into these certain REITs or these certain crowdfunded private companies just expecting those massive returns.
Right.
Cool, guys. Anything else, or should we jump ahead?
What's next on our list?
Oh, well, we're surprising you while you're driving carefully. Hold on a second. we're talking condos.
Ooh.
Yeah,
are they a good investment?
Yes. That was that U.S. News article. Is a condo a good investment? And first I was wondering, like, what are they? Of course it is. Like, what's the? I just thought it was a silly headline at first, because it is, I think any particular condo has the potential to be a good investment.
But don't you think it's location determined?
Yeah. I mean, I saw the title and I thought, exactly, Kimberly, with the right location, why wouldn't a condo be a good investment? I didn't quite understand what they were getting at. But,
Right.
Kimberly, you want to take this one a little bit?
Well, certainly, I'm down here in, Clearwater Beach area, which is consistently ranked in the top 5 in the country. So a condo investment anywhere on the beaches, I think is always a good investment, especially in the areas down here where you can use it as a vacation rental. Just south of Clearwater Beach is a little bit more restrictive, but just south of Clearwater Beach, you have 9 other beach municipalities. And it's a great investment because they can do nightly or weekly. And I primarily have worked with buyers that are buying their second property or third property as an investment property. And the return on their income has been just fabulous. I mean, especially now because people are doing more of the local staycations or staying within the country, not traveling quite as far. So they're booked up for 2 years, half the people that I speak to. So investment property in location wise, it's great. I could see in New York City, the prices have dropped a bit in the condo market there. It's creeping up a tad, but I just had a buyer that went up there and bought and got a pretty good deal for right now. But I don't know. I think if you're thoughtful about it and if the HOA fees are not over the top, I think it's an excellent investment, especially in a vacation market where you're going to keep it full if you want to use it as a rental.
That's a good point.
Do you find, are there a lot more condos in these sought after areas than detached homes where you're at?
Sandside, yeah. There's like I said, there's 10 different beach municipalities here in Tampa Bay, but on the sand, it's primarily condos. And, the prices certainly have gone up. But when I first moved back down to Florida, you could get a sandside condo in the 300s or 400s. Now you can't, but all of my past clients have purchased on the beach. It's vacation world for everybody that comes here, and that's where they go. They go to where they can get something for a few nights at a time or a week at a time. Yeah, it's definitely a valuable investment, at least here. I don't know. How about where you guys are?
Yeah.
Well, go ahead, John.
Okay. Just to jump in, I would say in general, I mean, absolutely. It of course depends on always how long you're going to hang on to that property and what your plans are for it. The Airbnb type style investments, probably similar to where you're at, Kimberly, are really hot, and you can make a lot of money in a short period of time, but it is seasonal, and not all of these HOAs will allow short-term rentals. A lot of them won't, under 30 days, for example, and some of them are much more than that. So I think whoever is making the investment just needs to be very clear on their criteria. But as far as whether or not it's a good investment, I would say absolutely. I always like to look at the HOA financials for these condo developments and see how they're doing from an accounting standpoint. But right,
I feel like we're missing out on some good
roof,
points right there.
stucco,
Yeah.
siding.
You
Did I break
just cut
up?
out a little bit. Yeah, you just cut out a little bit.
Oh, yeah. So, so anyways, I think that it is a good investment, especially if you want to be more hands off, because so much of that is maintenance wise is covered by the HOA. So
You John, you touched upon the restrictions, the rules and restrictions, And
Right.
Kimberly, I want to tell the story real fast, and then I wanted to find out what you guys are dealing with condo restriction rentals. But John talked about this 30-day, and we do see that a lot, where the CCNRs are really putting in those guidelines that, no rentals under 30 days, especially when the pandemic hit. Everyone that had maybe a second home somewhere, whether they lived in San Diego or not, they were trying to rent that sucker out as much as possible, and
Right.
capital. And where some of my family lives in Solana Beach, that's just north of San Diego, about 20 minutes. They even had neighbors that were saying, you know what, I don't even care if I get fined, because it's cheaper for me to pay the fine. I'll make more money renting it out for 2 or 3 days at a time.
Yeah.
And I'll just pay the fine each month. And
Wow.
So like that's how crazy I saw it getting here. Do you see those restrictions as much, or has that changed over in your neck of the woods, Kimberly?
Again, it's so interesting. It's almost like block by block, along the stretch of the beaches, there's varying rules. Some are 1 month minimum, other is nightly. And so people kind of shop accordingly. But right now, even the monthlies are full throughout the year, because we have so many people that, because they can work remotely, instead of coming down for a week, they actually come down for a month. They bring their kids, they do online school for that month or whatever. So it's been a fascinating process to see, because, a few years back, the monthly was harder to sell, but now it's not nearly as hard. And people kind of skirt around it a tad, like if you have monthly, that means you can have 12 people rent. And sometimes, people get family that come in, so people have kind of figured it out. But for the most part, even for the monthly, the more restricted rental rules here right now, it's become just as popular as the nightly. So I'm having buyers that actually are not afraid to buy the more restricted rules, because the money has proven to come back. And so most of the people that buy, at least in my experience, just want to pay the HOAs, the taxes, the mortgage if they have one, pay all the fees, and come out even at the end, and then build equity and later kind of, build from there. So that's always a good analysis to do when you're working with somebody that's looking for a condo. Run the numbers, and if you just want to break even at the end of the year with the rentals and all that, then that's usually how a lot of people start off for the first couple of years of having the condo. But with a little bit of thought, and certainly working with folks like you or me that are experienced and kind of know how to analyze it, I think it's a really good investment for sure for anybody. And, wherever they are, you can figure out where the money makes sense. If you're trying to use it as a rental income, I guess is the question.
Yeah.
Right.
Yeah. Makes sense to me. It's not only individual to the actual condo, but it's individual to that investor, right? Into what their immediate goals are, what their long-term goals are. I've had clients that are comfortable even just taking a hit, knowing, listen, we're in this for the long run.
Yeah.
And right now we just want to make sure that we have diversified and have that brick and mortar, rental. That
right
have.
And I get texts all the time from past clients that, since everything's gone crazy in a good way price wise, they're like, thank you, because they couldn't afford to get in it now when they got into it a few years ago, and they can't keep it empty even for themselves to come visit it. So
that's a good problem to have.
Yeah. During the pandemic, what was kind of interesting, especially those that actually from all over the country, when things shut down for rentals, they got down here and they just stayed in their place. It was like they just moved to the beach. I had at least 10 different people I know that bought through me that were staying at their place for that entire shutdown, because they couldn't rent it. So it was actually kind of a beautiful little gift out of the bad stuff,
Yeah. Well, and John, I think you and I have chatted how we also observed people just escaping San Francisco and LA and grabbing
Yeah.
up, short-term rentals, but grabbing them for 3 or 6 months, just to hunker down while, especially initially.
Yeah.
Yeah. And yeah.
One of my friends, well, actually my nephew, who, when everybody went remote, I had a lot of people I knew that were in their kind of mid-20s that just went and moved to like a ski town, like moved somewhere because they were working remotely. So they actually got to kind of, like my nephew went out to San Diego for a month. He went to Colorado for 2 months, and he just kind of kept hopping around and having life experiences while working a full-time, good paying job. So
Yeah.
That's cool.
Yeah, I think this was a blessing for a lot of people, actually, who were in that position where they could work remote and just experience new places, and it freed up. I think it freed up people's mindsets as well as to what they could do, and people were taking trips and experiencing things that they had wanted to do for quite some time. So
yeah.
but yet we saw a lot of that here, like you were just saying, Kimberly, a lot of people that would stay in San Diego for a month or 2 or 3 months just to come and hang out, and some of them haven't left. they ended up buying homes here. So
Well, that's definitely what's happening here. Is I'm finding a lot of people that are accelerating their kind of lifestyle goals, which usually this was like the retirement state. And now, it's young families, young people that are moving here because they can now work remotely and accelerate where they want to be. So lifestyle here in Tampa Bay has become a huge migration to people that were going to wait until they were older. And now they're like, I can do it now. And so
Right.
it's fascinating the locations that people are moving to here from that further than I've ever experienced. A lot of Californians are coming here, which is very fascinating because every time I ever talk to people from California before, it's kind of like Florida was like the lowbrow version of life, So now, getting people coming from California because of cost, because money here is a lot cheaper than there. I actually have a referral that's coming in from Hawaii. I've had Washington State, Nevada. I mean, these are states that never came to Florida. We always had the Northeast and Midwest, but now it's like expanding out very fast, in a fascinating way. But yeah. I know that's off topic what we're talking about, but it's kind of a fascinating perspective of where you guys are and where I am, and we're both experienced similar things, but in different versions of it.
Oh,
Right.
absolutely. Well, we're allowed to go off topic and do whatever we want, Kimberly.
It's your show. I didn't know if I had to raise my hand first.
I love it.
But yeah, so I think the short answer to the article is yes, it's a good investment. If you're working with a really good realtor that knows what they're doing, right?
Yeah. No,
Yeah.
And not to toot our own horns, but even as John talked about looking at financials, I've looked at financials of some condos, even if it's in a good area, and I'm going, this is crazy. There's only 4 units. They have $0 in their reserves.
Yeah.
And their monthly is absurdly high. All it takes is for one of them to decide, oh, I lost my job. I can't make my monthly payment anymore,
Right. Yeah.
Right.
And
definitely, like the behind the scenes of the condo is huge.
Yeah.
Huge. Yeah.
But well, cool. Well, then let's keep on charging along. John, I know you're driving here, so I'm going to let you know we're talking about the Inman article. Hold on. I got to make this all fancy and get rid of his condo a good investment. So we can talk about first-time home buyers. The Inman article that was titled "Demand for Housing is Way Up. Are first-time buyers driving it there?" Did you catch that one, John?
Yeah, I did. I know, yeah, if you guys want me to jump in, now I can share a couple thoughts.
Yeah, go ahead.
Well, I know that, where we're out here, I mean, in your market as well, Kimberly, our average price point for North County for a single family detached home is now we're pushing like $1 million. And that's an average. So it's projected to go up quite a bit this year. So first time home buyers, unless they're getting some money from mom and dad or Uncle Bob, it's very hard to compete because they don't have the equity that a lot of people use from another property that they own as a down payment. So it's very challenging. And in general, if it's all on them, it's a different price point. So it's not your $1 million price point right out of the gates. It's more along the lines of 700,000. And disrepair, it's really not the nicest neighborhood, So it's a challenge for first-time buyers. But that being said, there are a ton of millennials out there that are first-time home buyers looking.
Oh, we're starting to lose you, dude.
Looking to purchase. And so, place, but your second, third time home purchaser is taking a look at. So, I mean, that's my 2 cents. And we work with people that are on all ends of the spectrum.
I feel like I'm missing the good stuff.
I know.
It's almost like a Saturday Night Live skit.
Well, but yeah, John, it was just the toughest part about it is you would go, well, this is the most important piece. And that's all I have to say about that.
Oh my gosh.
And with that, you learned a lot.
Yeah.
Yeah.
No, I think we were definitely catching what you were talking about, though. I mean, it's they have a ton of competition. These first-time home buyers, they aren't pulling from any equity on homes, that they are potentially selling, like these second-time buyers. I think maybe you said this, but we couldn't hear you. They have a lot of debt, right? They have student debt. The article also talked about, it was talking about the rental prices. So it's not, I mean, unless they've been living at mom and dad's, they've been paying a ton of money to rent and to pay off some of this debt. So they don't even have that down payment.
No, exactly right.
And
I mean, in my opinion, in answer to the question of the article, I don't think first-time homebuyers are driving up demand. I think it's for me personally, my experience here, it's the migration of people that have that equity, coming from states that, we have so many cash buyers now, so the competition for a first-time home buyer, as you said, is really very difficult. But I don't think they're driving up the demand. I think the demand is being driven up by second and third home buyers as well as investors right now, because, with the rates being so darn low, people, I think that's kind of what happened with Zillow. They got maybe a little ahead of their skis on their investments, but the demand is the competition of how many people are entering the market because they have so much equity in their home. And so they're either buying a second home as an investment, or they're downsizing or upsizing. But the first-time home buyers are competing with everybody that didn't really exist as much. And I think that as the rates adjust a little bit more, the first-time home buyers, what I've been studying, they're going to be the ones kind of mostly affected by the rates being adjusted, because the prices are so high. It was hard for them to enter anyway. And now if the rates go up at all, they're almost eliminated unless they have secondary support from parents or some sort of, I don't know. I don't work with a lot of first-time home buyers, but the few that I have worked with in the last few years did wind up having some help from like a co-signing person or something like that kind of helped them get the loan. But it's tricky, if you don't have a lot of cash. Referencing my nephew again, my older brother's oldest son, he was given the best advice from my older brother, is that when you get out into the working world, live off half of your salary and save the rest. And so he, over COVID, wound up buying his first investment property because he had been playing it smart. But yeah, it's a tricky one because rent rates are going so crazy. And you do hear right now of a lot of folks in their 20s and almost into their 30s living with their parents while they're trying to stockpile enough to be able to get out. So it's a tricky time. I've got 2 college-age kids, so I'm not. It makes you kind of not anxious, but very aware of how to maybe do it right. But I don't think they're driving the demand, but I think they're highly affected by the demand. I think they're the ones suffering the most in this process.
Feels like. I agree with that. And then I would probably tack on, I felt like they didn't discuss the fact that if you take a sample property here in San Diego, when you have 2 cash buyers, you have offers from 2 cash buyers, and then you have maybe 2 others from second-time buyers, I feel like the first-time home buyers are adding to the whole excitement of it all, because then you'll have 2 or 3 of those. Do you know what I mean? Mm-hmm. Where it's
and then you have the investors playing the part too, because first-time home buyer prices is also the investor price.
That's right.
So, which is the cash buyer, but they're going to be, more savvy on it.
So I don't think they're necessarily driving it up by winning the bidding wars.
That's true.
But I do feel
but they're participating a whole lot.
Yes. Well, and their participation, I think, is helping drive the excitement. I guess that's what I felt like they really didn't talk about. I mean, they talked about more about how hard it was for them. And I think we all agree it's very hard for first-time home buyers, but their participation, I think, played a lot in it.
Yeah. It's true.
Definitely. Can you see me now, Jeremiah?
Oh, yeah.
And we can hear you too.
Hey, imagine that. I think you're both. I mean, we're seeing the same thing, is that the rental market is it's going haywire here. Earlier today, I was at a rental property that my wife and I have, and literally a neighbor came over and wanted to sign a contract with me right away because my tenants are vacating the property, and the price is going to be substantially more over what the previous tenants paid. And this gentleman said, no problem. He wanted to pay me right then to lock it up. So it's not a healthy marketplace, and we don't have the inventory to satisfy all the people that want to buy homes. And unfortunately, the prices are just going to continue to climb. And I thought you made a great point, Kimberly, in that if the interest rates go up 0.25% or a third, that is going to knock some people off the fence, and they're no longer going to be able to buy. Mm-hmm. And these are first-time home buyers. That's who it's going to impact.
Right.
It's not our investor friends. So, I mean, I'm encouraging all of my clients to get in, if they've been thinking about it for a while, as soon as possible.
That's right.
But of course, it's an unbelievably competitive marketplace right now.
And it's crazy. I work with a couple investors, and one, I've sold him, a couple homes, 3 or 4. But anyway, it's interesting to see his price range bump up. Like in the very beginning when prices were shifting, it was kind of like, no way. Now, like his opening, the properties that he's sending me are at a whole different price category. And then we're still losing and he's full cash. We're coming in over, and it's the competition is crazy. But, you know, in the beginning, when I first started working with him, we would lowball. You don't lowball anymore.
Yeah, no.
You know, lowball is coming in and asking. You know?
Yeah, exactly.
I mean, that word doesn't even exist anymore, you know?
No.
So
No.
it's just, yeah, it's an interesting time. I don't know how long you guys have been licensed. I got licensed in 2004. So I kind of hit it when it was a hot market then, which does not even compare to now. And, you know, it's everybody wants to get in when it's really hot, but really and truly, this isn't the most enjoyable type of market to work in. I mean, it's good money. It's good turnover for us. You know, we do well in it, but I like kind of playing it correctly where it makes sense. You know, it's just hard to really, you know, make sense of it sometimes. And how do you compete when you're, I don't know what your highest number of offers on the property. I think mine was 67.
Oh,
but you know, so you can't even logically, you know, I was an attorney. I'm very like, I know how to negotiate and know how to think through things. I know how to really plan it out. It's just throw it up in the air. I don't know. I mean, it's just, there's no logic. And then who wins? It's so funny because I always follow up and say, you know, what did we do wrong, so to speak? And it's illogical. It's sometimes like, well, you came in 30 minutes after the other offer. And so,
Yeah.
Okay. So I can't even counsel my buyer how to do better because it doesn't make sense, you know?
Right.
Yeah. So it's fine. And, you know, it's trying to go the old fashioned way of finding homes for these people. You can't even convince somebody to put their house on the market at a high premium right now because they don't know where to go. So it's like, what's the advice you give them? Like, hey, you can get 100,000 more than you paid last year, but where do they go?
Right.
So I don't know.
And it doesn't sound like they're going to Florida either, you know?
They're not going to California. No, I can't get them to go back to Minnesota.
Yeah.
Because truly, though, you can't even convince them to go anywhere in the country because nowhere is inexpensive right now. Everywhere is the same, you know? Like the states that used to be a good deal, you know, you can't do that anymore.
Isn't that the common theme that I'm seeing now? Now I think we've kind of dipped into host chat at this point.
Yeah.
Yeah.
But you know, but isn't this the common theme that we're starting to see that, or I'm starting to hear talking with different people around the country, is that there's no longer the, you know, to buy in the middle of Kansas. Well, you know, I talked to someone the other day and they were like, Kansas is getting expensive, you know? I mean, there's and then can you even pull that off with your work, right? So
right.
Well, I've heard of people right now that are buying in the low tax states or the more, you know, better climate states, like leaving, for instance, the places where everybody used to go, like New York City, San Francisco, you know, Chicago, leaving to buy property in like a Nashville or Tennessee, you know, or Texas or Florida. And then they just commute to New York City once a month or once every other week. Wow. It's cheaper to do that because they can buy more land, bigger house. They can accelerate their dreams because they're not beholden to show up at Morgan Stanley every day. They can fly to Morgan Stanley because they're letting the employees kind of choose what model they want to do. And I just sold a house to a young family from Minnesota, and one works for Google and another works for another tech company. And they left Minnesota now because they're just working remotely. They choose to work remotely. And if they have to go back for a team meeting, they just fly up to Minnesota, but they live down here now. You know, so it's kind of it's a reverse retirement model, really, you know, which is kind of cool. It gives a lot of choices, that's for sure.
Well, and I'm wondering, will that be the new norm for a lot of
it has to be, because companies are now seeing that it's far more fiscally beneficial to them.
Mm-hmm.
And then what happens with all these commercial buildings, like even like in real estate, I'm with EXP, which is a cloud brokerage, and that, they're kind of accelerating that process. But like, you go to some of these, like when I was back up in Minnesota over Christmas, like these huge 13-story Coldwell Banker buildings, like nobody like I've got an office that I rent because I like to have my space, but like these brick and mortar, like basically McMansion of offices, it's like, what will happen? What are they going to turn into, or shopping malls for that matter?
Right.
Like you go into Barnes and Noble bookstore, it's a ghost town nowadays, which is kind of sad, but it is,
Well, and why I think I agree with you. I think it's going to continue. This is going to be the new norm because, like my kids, for example, I have twin boys that are 11, almost 12, and they're not used to going in to the bookstore. They're not used to going. I mean, we go to the library, but it's more or less, we go to the library, you walk in with a mask, you get your book, it's already reserved for you right on the shelf, and then you leave.
Like, where's that enjoyment?
But like it's nothing like we experienced, right? What a library actually is. They just think it's a drop off and pickup location.
That's interesting. You're right.
So then, I would think that's going to drastically affect Barnes and Nobles.
Like when you go to some of these department stores, you're not even allowed to try on the clothes. So then what's the point of going there? It's easier to order online,
Right.
And or makeup. One of my favorite things have always been to go to the counters and have them do my face and tell me how, this looks and do my eyes, and they can't touch you anymore. So it's like, I'll just order online because some of the value of the in-person experience is missing.
Right.
And I just went to not to get way off topic, but it was interesting. I just went to a traveling Broadway type of show the other night. And it's the first time I've been to one since, all the mess, but it really was not the best experience because you had to bring your card, had to wear your mask the whole time. And they didn't have any concessions because you weren't allowed to have drinks in the in the theater.
Mm-hmm.
And so that's one of my favorite parts is like coming in with my wine and watching the show. You can't have concessions because you can't take your mask off because I don't want the performers to inadvertently get sick. And so I get that in some ways, but I don't in others because it's just like, I don't want to go back and not have my little wine.
Yeah.
But I did go to like a musical performance at a different theater. I guess I've learned, I'm not to babble, but I learned that if it's union based, then the rules are different. So I went to see REO Speedwagon, not to date myself, but I went to go see them. Nice. And it was the correct theater experience, but it was also before Omicron. So maybe it'd be different now. I don't know. I don't know. Anyway, don't want to go on that subject.
Yeah. I mean, John, we see a little bit of it all here, right? I mean,
we do. It's a mixed bag. So, I mean, you definitely have to carry a mask on you when you're showing property, and you have to be very sensitive to your clients, right? Some clients are more free and loose about it and others aren't. And same with venues and things like that. Some restaurants require it, some don't. I was in Barnes and Noble just right after the Christmas holiday with my kids and my wife, and they were having some 50% off sale of all their hardcover books. So we stocked up, but I don't know how they compete with the likes of Amazon.
No. I mean, you order it and you get it that afternoon sometimes,
I know, exactly.
Like, where are these little people putting the delivery?
Yeah. Yeah. Where are those Oompa Loompas, huh?
Hey, let's not talk like Oompa Loompas like that, okay?
Okay. Yeah. Well, I'm due to hop on another call. I'm so sorry, you guys. At noon here, our time, Pacific time. But
John, thank you for doing your best to play such a large role in this while your commute was going on.
It was a bit of a hack job, but
no, it was good.
I thought it was fun, and then of course, Kimberly, thank you so much for joining us.
Oh yeah, it was super fun.
Yeah,
I learned stuff today.
Well, yeah, that's what John and I always talk about.
I didn't know about the whole investing things. So I'm going to do a little more research on that.
And I would love to get your information as well, Kimberly. I don't know if you go through Jeremiah or how that works, but just to maintain contact.
Oh, absolutely. Yeah, for sure. Yeah.
I'll text you guys in a group chat just so we have all each other's contact info.
That'd be great.
Awesome. Thanks.
All right, guys. Hey, a lot of fun. Thanks again, Kimberly. John, have a
Of
great
course.
day to you too, buddy.
All right. Thank you.
Have a great day, you guys.
Bye.
Bye.
All right. Bye.